Hi friends, welcome back to FinveStocks. Yesterday, Nifty fell by around 1.6%. The reason for the fall, everybody knows, is the Hindenburg report on Adani group of stocks. So the short-term pain in market will be there till the clarity emerge. In this situation, one should focus on good quality stock and start accumulating the stocks. So in this video, we are discussing about 5 stocks which are in a good level for accumulation. Before jumping into the video, wish you all a belated Happy Republic Day. If you see the current MMI, that is Market Mode Index, which is shown in ticker tape. So the Market Mode Index will show the sentiment of the market. So currently, market is in fear zone. These are the areas where one should accumulate good quality stocks. So as Buffett always says, be fearful when others are greedy and be greedy when others are fearful. Now let's see the current situation of Nifty. Currently, Nifty is trading around 17,607, so which had broken the recent support of 17,800 level. So once it closed 17,800, the next support is at 17,600. So currently, Nifty is trading at a support zone, which is 200-day moving average. So once it broke this 200 moving average, it can go to 17,375. After that, there is a small support at 17,200. Below that, it can go up to 17,000 level. So if you see the RSA, Relative Strength Index, so it has reversed so many times at 30 RSA level. So in this case also we can expect it can touch around 30 level and it can reverse from there. So we are expecting some pullback around 17,375 to 17,000 level. In this level it can come down and it can bounce back if the clarity emerges. And also market is waiting for some of the clarity in this Adani group of stocks. Second one is waiting for the budget to finish. Third one is the Fed meeting. So all these things market are waiting for these main events. Once the event completes, market can take a direction and it can move forward. As a disclaimer, the stock discussed here in this video are not a buy recommendation and it is only for study purpose. Please discuss with your financial advisor before investing. So the first stock we are going to discuss here is Reliance. It is one of the best stocks to accumulate at current situation because Reliance is trading at a good valuation zone. Reliance Industries. Reliance Industries, as all of us know, is a Fortune 500 company and the largest private sector corporation in India. It is holding so many brands, so many companies we know under Reliance. So if you see the revenue mix of Reliance, 48% of its revenue comes from refining and marketing. Next comes the retail segment, wherein it is having companies such as Reliance Digital, Reliance Fresh, Reliance Trends and Agio. 18% of the revenue comes from petrochemical business. 8% of the business comes from digital service, which includes Geo. And rest 6% comes from media, entertainment and others. Now let's see the Reliance chart over last 20 years. So Reliance has given a massive return of around 4,800% over last 20 years, which is approximately 48 times of its value. It is massive. So for Reliance also, it is not like one-way uptrend. It is like phases of consolidation and after an uptrend. So it has given two consolidation in last 20 years. First one is between the period of 2000 to 2005 and later from 2007 to 2017, which is fairly big period. Once it closed the channel, it has shown the uptrend and it was continuously on an uptrend for last 5 years and currently it is trading in the range of 2600 to 2400. After good uptrend, now it is on a consolidation phase. Now it is stuck in a channel of around 2800 rupees to 2200 rupees. If you see the price volume chart of Reliance, after an uptrend, currently the Reliance is in a consolidation zone. It is currently stuck in a channel in the price range of 2800 to 2200 level. In recent years, in volume, it has shown a small dip. Similarly, the dip is shown in the price also. So when the price as well as volume both is on a declining zone, it means it is showing a sign of trend reversal. Now let's see the EPS by PE chart. These charts are available in screener.in. So just for study purpose, I am just taking all the charts available in Screener so that we can get an idea how to use this chart. So the second chart is PE to EPS chart. So in this chart, the blue bar is showing the EPS and the blue line chart which shows the PE. So PE or price to earning ratio is the ratio between current share price and earning per share. So if you see in this chart, here we can see an uptrend of earning per share. So once the earning per share increases, obviously the PE has to come down if the share price is constant. So in this case, from 2017 to 2019, there was an uptrend in share price. That is the reason why the PE is also showing uptrend. After that, we can see a dip in earning. This dip in earning is resulting in increasing PE ratio. So that is evident from this chart. After 2021, there is a sudden increase in price of Reliance. So increase in price will directly affect the increase in PE ratio. But here the earning also increase. The increase in earnings will cause decrease in PE ratio. That is the reason why on PE chart it is showing a slight decline. The next chart is sales to margin chart. The purple bar shows quarterly sales, wherein the red line shows the gross profit margin and the green line shows net profit margin. So there is no direct relation between sales and gross profit margin. So the ideal situation is if the sales is improving and the gross margin is improving, the company will post good results. So in this case, currently the sales is improving, but company is not able to maintain the gross margin. Gross margin, there is a slight dip in gross margin. Because of this reason, there is a dip in net margin also. So company should first protect their margin. It should be in uptrend or it should be consistent. The next one is book value and price to book chart. So the blue bar which shows the book value. Book value is the overall asset of the company. There is no major change in the graph as price as well as book value is consistent. Next one is market cap to sales. The blue bar shows the sales of the company and the line chart shows the market cap to sales. So the market cap to sales is used for spotting recovery situation in a company. So if the ratio is less than 1, the stock is considered to be undervalued. So currently if you see, Reliance is trading in the range of 3. At current level also, Reliance is slightly expensive, but you can consider this as a re-rating of the stock. Here also if you see, as the sales comes down, the market cap to sales ratio goes up. This is because of the increase in share price. And after going into a high valuation zone, now it is coming back to settle at a lower level. The next one is EV by EBITDA. EV is enterprise value and EBITDA is earning before interest, tax, depreciation and amortization. So first we will see what is EV. EV is enterprise value. Enterprise value is the valuation of the company. Suppose somebody is going to buy a company. So the overall value of the company is called enterprise value, which includes market cap plus what all debts they carry along with the company minus any cash availability with the company. So this is the formula for enterprise value. So in this chart, the blue bar shows the EBITDA value and the line chart which shows EV by EBITDA. The lower the EV by EBITDA, the more attractive the stock is. The ratio should be less than 10 to consider that company as healthy. So it is approximately 10% of the EBITDA. Here if you see the EBITDA is coming down here, but the ratio of EV to EBITDA is going up. This is because of the increase in price of the stock. Because market cap is indirectly is the price of the stock. Market cap is calculated as price of the stock or the current price of the stock multiplied by total number of shares. So market cap is indirectly the price of the stock. Now let's see a quick snapshot of the company's performance. Currently, Reliance Industries is trading in the range of 2,383. So the market cap is around 16 lakh crores. Currently, the stock is trading at a PE of 25.3, which is above the industry PE of around 4.1. The book value of the company is 1,100, is having a dividend yield of around 0.34. The company is having ROCE of 9.42 and ROE of 8.16, which is slightly less compared to the industry standard. Reliance is having a face value of 10 and the debt to equity ratio is around 0.4, which is okay. Companies doesn't have any pledged shares and the recent sales growth of the company is around 36% and the profit growth is in the range of 15%. If you see last 3 years, ROE is in the range of 8.1, which is consistent, and ROC is in the range of 9.37. Sales growth for the last 3 years is around 7%, and the profit variation for last 3 years is around 14%. The company is having a free cash flow of around 13,000 crores, which is good. Now let's see the current performance of Reliance Industries based on the latest quarter, that is December 2022. Now let's check the recent performance of the company. So when you compare the recent performance, we have to compare with the previous quarter as well as we have to compare with the same quarter of previous year, that is December 2021. So these are the box we are going to compare with the current results. So when you see sales, sales is at around 1,25,000 crore, which is less compared to the last quarter. But when you compare with the last year same quarter, it is showing good improvement. Similarly, on operating profit, the same thing is reflecting. The operating profit grew from 13,895 to 15,000 crores. Similarly, on operating profit from last quarter is showing a good improvement. On operating margin, in last quarter the operating margin was around 9%, which has improved to 12%, which is very good. Similarly, if you compare with last year, company is maintaining same operating margin. If you see profit before tax, the company has shown a good profit before tax from 9,700 crores to 11,700 crores. When you compare with the same period last quarter, shown a dip in profit before tax. That can be because of drop in other income. When you see the current shareholding pattern of the company, and DA has increased its stake from 14.91 to 15.26. So what is the support level for Reliance? Currently, Reliance is in the range of 2300. So the next level of support for Reliance is around 2248. Suppose if it crosses this 2322 level, it can fall up to 2200 level. Further, it can go to 2200 level. In current situation, this 2200, this zone seems to be a good support zone. So Reliance can take support from this zone and it can bounce back. Currently on monthly chart, it is stuck in a channel between 2200 to 2800 range. So once it breaks this channel, it can go down. If it able to hold on this support level, then it can take a support from this level and it can go back to this level. So once it got good momentum for breaking this 2800 level, then it can go to a much higher level. So as a conclusion, one should start accumulating Reliance at current levels. So current levels, it is showing good valuation for the company. One can plan to accumulate in the range of 2000 to 2200 zone. So this is an ideal zone for accumulating Reliance. So in our next video, we will analyze one banking sector, that is a stock from banking sector. So if you see Nifty 50 banks in 2002 and 2023, it has gone massive returns over last 20 years. So guess the banking stock which is fairly valued to accumulate at current level. So that detailed analysis of that stocks we can see in our next video. Thanks for watching and have a good day.